If you think a buyer's agent just finds properties, you're missing the majority of what you're paying for. There's a version of the buyer's agent pitch that goes roughly like this: we save you time, we find better properties, and we negotiate a better price. That's not wrong, but it's also not complete. And if that's the extent of your understanding of what a buyer's agent does, you're probably undervaluing the service, or worse, you're evaluating the wrong things when you're deciding whether to engage one. So, in this video, I want to walk you through what actually happens inside a properly run buyer's agency engagement. Not the headline version, the actual work, start to finish. Because the honest reality is that the property sourcing part, the bit most people think is the whole job, is probably the last 20% of the process. Everything before it is the work that determines whether the sourcing even goes in a useful direction. Let's start at the beginning. The first stage is what I would call financial and strategic alignment. Before we look at a single property, we need to genuinely understand your position. And I mean more than your borrowing capacity, though that's part of it. We need to understand your current asset base, what you own, what you owe, how your existing portfolio is structured if you have one. We need to understand your income profile and its stability. We need to understand your timelines. Are you trying to build a multi asset portfolio over 10 years, or are you making a single strategic purchase and holding it long term? And we need to understand your risk tolerance as well. Not the theoretical version, but the real version. What does a few months vacancy in the worst case mean for your cash flow? Can you carry that? What happens to your financial position if rates move another 50 or 100 basis points? This conversation typically takes a full session, and it's not a formality. The information that comes out of it directly determines the structure of everything that follows. The second stage is brief construction. The brief is the most important document in the whole process. It's where the strategy gets operationalized, where abstract goals become specific search criteria. A well built brief will define the price range within which we are operating, the asset characteristics we are targeting, the markets we are searching in, and why, the yield and income criteria the property needs to meet, the supply and demand characteristics we require from the submarket, and the conditions that would exclude an asset regardless of its other attributes. The last one matters. Exclusion criteria are as important as inclusion criteria, and most self directed buyers don't have them. They end up evaluating every property that vaguely fits, which is exhausting and produces inconsistent decisions. If you're thinking about what a brief looks like for your specific situation and you want to work through that with someone who's built a lot of them, that's the conversation we have in our discovery calls at OV Property Buyers. Link in the description. No obligation, just a genuine conversation about whether there's a fit. Third stage is market and asset research. Once the brief is built, we go to work in the markets that meet the structural criteria. This isn't scrolling through real estate portals, though that's part of it. This is analyzing vacancy data, rental market depth, sales transaction volume, infrastructure pipelines, planning overlays, population dynamics, employment based diversity. We're building a picture of which markets and which specific pockets within those markets have the demand characteristics your brief requires. Then we start shortlisting properties. And here the exclusion criteria does a lot of work. The brief eliminates the majority of what's on the market, which means we are spending our time on genuine candidates rather than on properties that superficially seem fine but don't meet the full criteria. The fourth stage is due diligence, and I want to spend some time here because it's the stage that's most undervalued by self directed buyers. Due diligence operates at three levels in our process. The first is asset level: pest, building reports, title search, flood and fire zone checks, easements, any planning issues that could affect the property's use or future development potential. This is the baseline, and it's non negotiable. Second level is market level. This is where a lot of buyers stop short. We are asking, what does the rental demand picture look like, specifically for this dwelling type in this location? What's the competing stock? What's the pipeline of new supply? Are there any infrastructure changes, road projects, rezoning that could affect the amenity or demand profile of this specific location over the next 5 to 10 years? Third level is portfolio level. How does this asset fit within your broader position? What does it do to your geographic exposure, your cash flow profile, your overall risk concentration? Does it improve your position, or does it introduce a risk you were trying to mitigate in the first place? Full due diligence package with our assessment and recommendation goes back to you as a written summary. You see our reasoning. You understand the risk factors we have identified. You make an informed decision. Fifth stage is negotiation and contract management. If we do proceed to an offer, we manage the negotiation. We know the comparable sales. We have assessed the property's value independently of the asking price. We have a walkaway position defined before we make contact with the selling agent. After contract execution, we stay engaged through the settlement process, coordinating with solicitors, managing timelines, making sure nothing falls through the cracks in the weeks between exchange and settlement. And beyond settlement, we stay in contact, not because we're trying to sell you another service, because a good buyer's agent thinks about your portfolio trajectory, not just the one transaction. If your circumstances change in 18 months, it makes sense to reassess your position. We want to be a useful resource in that conversation. That's the actual scope of work: alignment and strategy, brief construction, market research and shortlisting, three-level due diligence, negotiation and contract management, post settlement accountability. Finding of the property is the culmination of all of that, which is why evaluating a buyer's agent on the basis of how do they find properties is a bit like evaluating a surgeon on their stitching technique. It's the visible part, but it's not where the important work happens. If any part of that process is something you want to understand better for your own situation, follow the link in the description to book a discovery call.